It's simple enough to say that Baidu is China's Google, but in reality, the company offers so much more. In this video, I will recap the recent earnings, I will analyze the company, and I will give my 2 cents on what's next for the company and its price. If you're interested in videos like these, make sure you subscribe down below, but without further ado, let's get started. This week, Baidu reported their earnings and they were good. They beat the analyst earnings consensus of $1.61 by 32 cents or 20%, and the revenue consensus by $150 million or 3.5%. This is their 8th consecutive earnings and revenues beat. Their revenue is up 25% from 22.5 billion last year to 28.1 billion renminbi or $4.3 billion this quarter. Their non-GAAP earnings are also up 39% from 3.1 billion to 4.3 billion renminbi or $656 million. Now, we have recently seen the price of Baidu go down just over 50% from a high of $354 on 22nd of Feb to a low of $174 when Bill Huang's Archegos fund collapsed. It hit the $177 support mark again last week on the 13th of May, but has since recovered almost 10%. The stock is below its 200-day moving average, below its 50-day moving average, and was oversold a couple of days ago, but is now rallying and it's headed to the resistance mark of $205. Some factors that affected the price were the tech regulation crackdown in China and, most obviously, the Archegos fund blowup and its aftermath. Also, despite the Biden administration being much more lenient than Trump's so far, the threat of delisting Chinese companies is still there. However, a lot of big players have since entered the stock and actually took advantage of the dip that the Archegos blowup provided, and they've actually boosted their positions. Some of these include the notorious George Soros, Cathie Wood's ARK, Nomura Holdings, Jane Street, and Point72 Capital. By the looks of it, Baidu is ready for a big jump in price and all the indicators are there. We just need a good catalyst. This earnings beat could be it, but we need to keep an eye on the stock to be certain. If Baidu beats the $205 resistance target, the next stop is $233 and after that is $275. In my opinion, it is extremely likely to hit it, possibly this year. Why? As I said, a lot of large players and institutions have started buying into the stock, which is sending all the right signs to the rest of Wall Street. Currently, Baidu only has an institutional ownership of 48%, with 20% being owned by insiders and 32% being owned by the general public. Increased institutional interest may lead to big funds like Vanguard and BlackRock boosting their positions, boosting both the price of the stock and investor confidence, which could then lead to a positive feedback of more institutions buying in and so on. That's important because this is exactly what Baidu is lacking right now: investor confidence. It is obvious that most investors are scared to get into Baidu right now after seeing what happened in the last 3 months, but this is exactly when you should be buying. Why? Warren Buffett said it best: you should be greedy when others are fearful and fearful when others are greedy. Right now, investors are fearful. They are scared. As a result, they're missing out on one of the best deals of the decade. So, why do I think that? Why am I so bullish? We can see that the price is low, but is the company worth it? The answer? Yes. Hell yes. The company is extremely undervalued at this point, with a PE ratio of 18.4 and a forward PE ratio of 15.2. Management is expecting a revenue jump of between 14 and 25% this year alone. And analysts expect a 21% growth in earnings, which is also very high. Baidu has returned over $2.2 billion to stakeholders via share buybacks since 2020, so we can tell that the company is doing well. It is also involved in some of the most groundbreaking, revolutionary, and rapidly expanding industries right now. I'm talking AI, I'm talking driverless cars, I'm talking cloud. Baidu is at the forefront of all of these. In China, the biggest economy in the world. I mean, their AI, Baidu EasyDL, was rated number 1 in terms of usage in China in 2020. Their deep learning framework, Paddle, upgraded to version 2.0 in March 2021. It's also ranked in the top 3 frameworks globally in terms of usage based on pull request, according to GitHub. They have also launched China's first fully autonomous ride-hailing, Apollo Go. Essentially, it's a robotaxi. The estimated market size for robotaxis is expected to reach $224 billion by 2025 in China alone. And Baidu is a pioneer in this market. Baidu also had 558 million monthly active users on their Baidu app in March 2021, with over 70% of those users logging in daily. This is the equivalent of the entire US population using Baidu on a daily basis. They simply have a massive market presence. And if I can compare them to any company, it would be Google 5 years ago. Would you have bought Google 5 years ago? I mean, at this point, Baidu offers an unparalleled risk-reward ratio. The company is so cheap and you're getting so much for it. It's simply ludicrous. It has a market cap of $64 billion with $25 billion in cash. And they do have $10 billion in debt, but that still leaves us with an enterprise value of $50 billion or a 22% discount on its price. And all this for a tech behemoth in China that has the potential to grow 10 times in the next 5 years, and that's a conservative estimate. At this point, it literally sounds like it's too good to be true, but the more I read about the company, the more I understand that Baidu is simply a must-buy. This is obviously my own opinion and you should do your own research, but I'm very optimistic about Baidu's long-term prospects. Of course, being a Chinese company, it is always at risk of regulation and other unexpected events, but I think that the company more than compensates for that. US companies that offer services like Baidu trade at a high double or even triple-digit PE ratio. Baidu trades at 18. 18! This is low for a blue-chip stock. And the same can be said for another Chinese tech company, Alibaba. They recently missed their earnings, but their fundamentals are solid. Check out my recap of the recent earning reports and also take a look at my in-depth analysis of them. If you've enjoyed this video, let YouTube know by liking, commenting, sharing with your friends and subscribing. Thanks for watching and I'll talk to you soon.